my name is Michelle Butler, Portfolio Specialist at Cohen & Steers. Progress has been made, finally, on the U.S. infrastructure stimulus front. With the passage of the Infrastructure Investment and Jobs Act just last month, President Biden signed into law the largest federal investment in U.S. infrastructure in more than a decade. Not long thereafter, the Build Back Better, often called the Reconciliation Bill, passed the House and is now awaiting Senate approval. We believe the Reconciliation Bill stands a good chance of succeeding. If not by this year end, then it will likely get pushed through in January. On the heels of this landmark legislation, today I'm going to cover 3 areas within the global listed infrastructure universe that we believe will benefit either directly or indirectly from this significant, and I would say, in some cases, overdue investment in our country's infrastructure. First, electric utilities. So electric utilities and renewable energy developers should benefit from investment in clean energy initiatives. Second, cell tower demand could indirectly benefit from expanded broadband access across the United States. And then finally, third, I'll discuss how this adds to an already strong compelling investment case for global listed infrastructure. All right, so first, let's start by talking about electric utilities. We believe this infrastructure subsector should be a direct beneficiary of clean energy initiatives. The infrastructure bill includes $73 billion in funds targeted for investment in power infrastructure. Roughly half will go to developing clean energy technologies. So think of carbon capture, next generation nuclear, and hydrogen fuel. And then we'll also see transmission lines upgraded and equipped to better help supply renewable energy, and they'll be better designed to withstand natural disasters. So that's the infrastructure bill. Now, the newly improved Build Back Better, or as I said, often called the Reconciliation Bill, includes with it $550 billion in climate and related spending, so significantly more. The centerpiece of the climate spending for this bill is roughly $320 billion in clean energy tax credits, and that goes to producers and purchasers of renewables, so wind, solar, as well as new tax incentives for carbon-free nuclear generation and even standalone energy storage. So how does that benefit utilities? We believe these measures, along with direct pay tax credits, can augment utility cash flows and be a boost for any electric utility and renewable energy developer investing in clean energy. Significant targeted investment is also going to be deployed towards electric vehicles, or EVs, and that should provide a nice jolt to power demand. We estimate that every 3 EVs on the road is equivalent to adding another house to the U.S. power grid. And to accommodate that additional load in the power grid, utilities are going to need to invest more. Roughly more than $100 billion in either new generation, transmission, and distribution resources, all potentially enhancing their earnings potential. All right, so that's one. Now, second, 2 is tower demand. Tower demand could indirectly benefit from expanded broadband access. The infrastructure bill includes $65 billion to promote broadband access in rural and underserved communities throughout the United States. And that's going to be done via grants to companies, to utilities, also to local governments, to expand that connectivity. Once the service is in place, tower companies may have an economic incentive to build infrastructures that could help service providers essentially scale their networks. So by expanding the addressable market for telecom providers, this investment could eventually create new revenue opportunities for cell towers, fiber optics, as well as data centers. Now, to be clear, the cell towers don't actually receive those fiscal stimulus funds directly, which is why I labeled it as indirect. But I like to think of it as if they build it, then they will come. So it behooves the tower companies to penetrate these areas once the connectivity is in place. It's essentially creating new business opportunities for them. All right, and then last but not least, increased attention on infrastructure, we believe, has the potential to strengthen an already attractive investment case. Investors thirst for diversification and inflation protection, in particular this year. And that has put a spotlight on infrastructure. That's only been amplified by infrastructure spending programs in the US and around the globe. The investment case is strong. Aside from attractive relative valuations that continue to persist, it's the strong secular and cyclical investment themes in play that also bode well for the asset class. So that's the digital transformation of economies and also this shift to renewable energy that we've been talking about that offers potential long-term growth opportunities in the infrastructure space. At the same time, we're seeing stimulus measures and reopening economies that are driving increased trade, we're seeing increased travel, and also definitely increased energy transport volumes. With the virus variants, thanks to vaccine successes, and I would say even with the virus variants, we have seen vaccine successes. And despite some near-term mobility restrictions in select regions that we're certainly seeing now with the latest variant, generally speaking, the world continues its managed reopening process. And of course, that's positive for global listed infrastructure. All right, to wrap things up, historically, when there's infrastructure spending, it has resulted in a meaningful boost to the economy. And that makes sense. Remember, infrastructure by nature is an investment asset class, right? These are assets that provide essential public service to help facilitate economic growth. We believe the landmark legislation that has been passed with the infrastructure bill and that is likely to be passed with the upcoming Build Back Better bill or reconciliation bill is likely to deliver long-term potential for electric utilities, renewable energy developers, and cell tower companies. And on top of that, it adds to an already strong investment case for global listed infrastructure while supporting increased economic activity and job growth. With that, thank you for your time today, and please reach out if you'd like to discuss further.